Here are the crypto top headlines covered in this video. U.S. House approves crypto FIT21 bill with wave of Democratic support. Next, BlackRock, Grayscale, and Bitwise amend ETF filings before SEC decision. Also, Ethereum ETF approvals becoming giant political issue, says Joseph Lubin. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We have a quick request that doesn't cost you anything in order to help. Help us grow this channel to 1,000 subscribers by September, which would be our channel's 1-year anniversary. All we ask is that you click on the like and subscribe buttons as well as the notification bell. By clicking on these, it does help grow the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, U.S. House approves crypto FIT21 bill with wave of Democratic support. The House's passage of the digital assets legislation passes the crypto baton to the Senate, where odds remain low for decisive action. The crypto industry recorded its biggest ever U.S. policy win on Wednesday when the House of Representatives approved a wide-reaching bill to establish regulations for digital assets markets, recording a 279 to 136 vote that saw Democrats crossing party lines to support it. The Financial Innovation and Technology for the 21st Century Act, or FIT21, marks the first time a major crypto bill has cleared one of the chambers of Congress. The issue now heads to the U.S. Senate, where its future is much murkier because there's no counterpart bill. Support for such an effort remains unclear there, and the necessary committees haven't done the same level of work on crypto. The U.S. has fallen behind other global jurisdictions in establishing crypto regulations, and despite the win on Wednesday, implementing such oversight is far from complete. We need rules of the road, said Representative Josh Gottheimer, Democrat, New Jersey, one of the Democrats who bucked the opposition of the White House, and the ranking Democrat on the House Financial Services Committee, Representative Maxine Waters, Democrat, California. He called it well-reasoned, thoughtful, bipartisan legislation and argued before the vote that it's fit to become law if we work together. Overall, 71 Democrats and 208 Republicans voted in favor of the bill versus 3 Republicans and 133 Democrats who voted against. President Joe Biden opposed the bill with a policy statement, though he didn't say he'd veto the bill, as he had recently when Congress sought to overturn a Securities and Exchange Commission effort to set crypto accounting policy. SEC Chair Gary Gensler also came out strongly against the legislation in a lengthy public statement, arguing the bill wasn't needed and endangered existing securities regulations. The legislation, largely driven by House Republicans, would establish a regimen to regulate the U.S. crypto markets, setting consumer protections, installing the Commodity Futures Trading Commission, or CFTC, as a leading regulator of digital assets and the watchdog of the non-securities spot markets, and it would more clearly define what makes a crypto token a security or a commodity. Waters argued that the bill is seeking to let the crypto businesses who have been dodging securities laws avoid responsibility. They have already made billions of dollars unlawfully issuing or facilitating the buying and selling of crypto securities, Waters said, and Republicans are now proposing to reward these illegal activities by making these activities legal. Prior to Wednesday afternoon's vote, the House debated a handful of amendments to the bill, including by Representatives Greg Casar, Democrat, Texas, Brittany Peterson, Democrat, Colorado, Ralph Norman, Republican, South Carolina, and Scott Perry, Republican, Pennsylvania. Casar's amendment to change a crowdfunding exemption from $75 million to $5 million was defeated, but the rest were adopted. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, BlackRock, Grayscale, and Bitwise amend ETF filings before SEC decision. With the SEC expected to decide by May 23rd whether to approve or disapprove a spot Ether exchange-traded fund, 3 asset managers amended their 19B-4 filings. 3 additional United States-based asset managers with spot Ether exchange-traded fund applications in the pipeline have amended their 19B-4 filings with the Securities and Exchange Commission. In a May 22nd filing from the NASDAQ stock market, asset management firm BlackRock amended its spot Ether ETF 19B-4 application to remove provisions for staking. Grayscale and Bitwise filed similar amendments with the New York Stock Exchange, ARCA. Having the SEC approve the 19B-4 filings would be a step toward greenlighting the listing and trading of spot Ether ETFs on exchanges. Neither the trust nor the sponsor, nor the Ether custodian, nor any other person associated with the trust will, directly or indirectly, engage in action where any portion of the trust ETH becomes subject to the Ethereum proof-of-stake validation or is used to earn additional ETH or generate income or other earnings, said the amended BlackRock filing. On May 21st, applications from Fidelity, Van Eck, and Franklin Templeton, Invesco Galaxy, and ARC21 shares reflected similar amendments to remove staking. The SEC is expected to decide whether to approve or deny listing and trading by May 23rd when the regulator reaches its final deadline for Van Eck's application. For many in the crypto space, the SEC decision is becoming entangled in discussions about Congress considering passing legislation to better define the regulator's role in digital asset regulation. At the time of publication, lawmakers in the House of Representatives were debating the Financial Innovation and Technology for the 21st Century Act before a vote. The Depository Trust and Clearing Corporation lists Van Eck's Ether ETF under the ticker symbol ETHV, a positive but not definitive sign that the asset manager is preparing for SEC approval. It's unclear whether the Commission will move forward with the approval of spot Ether ETFs as it did with spot Bitcoin investment vehicles in January. Our next top headline, Ethereum ETF approvals becoming giant political issue, says Joseph Lubin. Ethereum co-founder Joseph Lubin expects several 19B-4 Ether ETF applications to get the green light, but anticipates a long wait before they go public. According to Consensus CEO Joseph Lubin, early-stage applications to launch Ethereum exchange-traded funds in the United States are as good as done. Speaking exclusively to Cointelegraph at DAppCon in Berlin, Lubin said several 19B-4 applications filed by firms like BlackRock will be approved by the U.S. Securities and Exchange Commission. However, their launch to the public could be a more protracted process. These 19-B4s from the exchanges, I think that's as good as done, Lubin said. But the S1s, essentially these new ETFs going public, that could drag on for a while. It's not clear that it will. My guess is this is now a giant political issue. According to Lubin, Donald Trump's presidential campaign representatives have also been talking to cryptocurrency ecosystem participants for over 2 months. That's what we've heard. They're trying to formulate a strategy, considering there are some really savvy supporters on the Democratic side. I believe that the presidential campaign and others will want to appear pro-crypto, Lubin said. The Ethereum co-founder added that the SEC is now under strong pressure to adopt a more neutral stance as the U.S. presidential elections draw closer. Lubin said that the potential approval of Ether ETFs would hopefully turn the SEC into a thoughtful regulator. If 40%, 50%, or 60% of the voting public have digital assets, you don't want to stomp on their portfolios. You don't want to stomp on institutions, pension funds, or other kinds of conserved funds, Lubin added. Consensus takes the fight to the SEC. Consensus announced in April that it was launching legal proceedings against the SEC for what Lubin has described as an undisclosed internal move to reclassify Ether as a security. Lubin said that dealings with the previous SEC regimen, headed by Jay Clayton, were more constructive. Prior conversations with the regulator afforded more discourse over whether Ether and other cryptocurrencies should be classified as securities. According to the CEO, the situation changed when Gary Gensler took over as SEC chairman. Lubin said that high-level banking and government factions had worked together to co-opt the Ethereum ecosystem. That's our working hypothesis. By co-opt, I mean make it into American-style decentralization where everybody has to come register. Maybe introduce some backdoors in the cryptography, Lubin elaborated. Over the course of 2 years, Consensus has acquiesced to SEC requests, providing more than 100,000 pages of documentation to the regulator. A decision to preempt further legal action against the SEC was taken due to growing concerns that the regulator was shifting its crosshairs over MetaMask, staking, developers, the Ethereum protocol, and its move to proof-of-stake consensus. Lubin said the SEC's lawsuits against Binance and Coinbase for allegedly offering unregistered securities and subsequent Wells notice letters issued to ecosystem players like Uniswap provided the impetus for a consensus decision to take on the securities regulator. We were told that there would be a Wells notice coming and were certain that they were going to follow through and sue us, so we went ahead and crafted an action. As Lubin explained, the decision puts Consensus on the front foot to push for critical answers over the SEC's actions over the past year. It also means that Gensler may have to give a definitive stance over whether Ether is being viewed as a commodity or a security. Everybody keeps saying it's a commodity, yet he can't bring himself to say that it's a security. He's punishing everybody in our ecosystem as though they've already determined internally, secretly, that it is a security, Lubin added. SEC gaslighted Ethereum in America. The SEC's stance on cryptocurrencies, and Ethereum in particular, has led Lubin to believe that it is intent on regulating technology and developers. This is far from the institution's mandate to regulate securities. Lubin said the SEC's stance has gaslit the sector and perpetuated a cloud of regulatory uncertainty. Nevertheless, Consensus is all in on taking the fight to the SEC and was ready to spend tens of millions of dollars on its legal battle. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.